The Hedgeless Horseman here. It's February the 2026. First of all, thanks to the sponsors. Let's look at the markets. I mean, I got prompted to do a video today simply because, I mean, it's a volatile day. And I saw some Copium comments, and I haven't seen those in months, basically. So I feel like that's probably more valuable, or I should say, I mean, as we know, buying low has the biggest payoff, and yeah, I mean that's where the biggest mistakes are done in volatility, right? I mean, it could be, of course, that you're buying too high. I mean, typically it's buy high, sell low. So I mean, if you have a bunch of stuff down, that means you're at least, you might be, buying some kind of, that it's around high levels, but it's not that you're not buying the top. So I mean, today, for example, I mean, gold is just down 1%. If the sentiment was different today, or like 3 weeks ago, maybe the miners would have been up or flat or something. But you have the markets going down again, obviously not related really at all to, for example, the gold mining sector, rather maybe a positive. What it means about, I mean, this is just just a 1 day move, so it's not too much to write home about. But I mean, we're in gold kinda because we see the current monetary system, economies, the debt burden being unsustainable. But I think it's, as per usual, it's the silver price that's dictating sentiment more in especially the juniors, probably the miners as well. I actually don't know how much GDX etc. is down. Crypto is getting its teeth kicked in. I mean, that's I was gonna say, I mean, that's neither here or there. I mean, most of this stuff is, in my opinion, worthless. So that's just, I mean, there's no margin of safety. Price is everything. And I think it's, I still think it's basically going to be close to zero 1 day. And as always, that does not mean I'm saying that, cryptography, I can't even say that. And blockchains, that's a thing of the past. That might be usable, but it's like, just because something has blockchain, it's like, I start a business. Internet is one of, probably the most material change to civilization in the last, I don't know, 50 years at least. Does that mean that if I have something, whatever, I make up a crappy business and then I plug in the internet, does that mean that my business is worth something because it's using an invaluable technology? Of course not. I mean, that was the whole idea behind the tech bubble. That's what I find kind of interesting. Same with Michael Saylor being almost, it looks like a moth to a flame when it comes to bubbles, where it's like, the IT bubble 2000s, he was the poster child, lost more than any one other person, I think, in 1 day. And the same thing was, happening back then. Internet and IT and whatever, I mean, being online, huge technological change. That didn't mean that it's like pets.com, etc., that they all of a sudden were invaluable because internet was invaluable. Even if blockchain turns out to be a very, somewhat, revolutionary idea, technology, doesn't mean that everything that uses it's gonna be. I mean, again, does anybody need Ethereum or Bitcoin? It's like, I mean, I haven't used crypto still. I thought about it. Well, I mined it in 2014 on a shitty laptop. I have no idea where those coins are, but I haven't used crypto. I don't feel like, my life is really suffering because I don't own Ethereum or XRP or Dogecoin or Bitcoin. No. And that's kind of telling, I think. It's like nobody actually needs this stuff. Is the technology behind it good? Can it be used for some applications? Absolutely. It might be, turn out to be a great invention. Anyway, enough of a rant about that. This video is probably going to be long enough. So I mean, what I'm trying to say is like anybody anywhere basically, if they're looking at their screens today, they're seeing blood, red. And of course, it's like even if every junior miner is down today, did actually anything change? Let's say you're in gold junior. And let's say you're not in production, then it doesn't matter that much. If you're a gold miner, at least the fuel went down, the economy on paper got a bit worse, and maybe lower labor costs, fractional, whatever, and the gold price is down 1% compared to yesterday. That's all we know. That's the effect of it so far. But that's not really how markets work, of course, because I bet there's a bunch of miners down more than 1%, and juniors are down a lot, even though they're 5-6%. Many times the decline in gold, because they're more tied to silver and appetite for risk overall, which is again kind of funny. And of course, I think that's one of the most obvious examples of why one can make money in this sector if you're a bit rational and long-term thinking. Because obviously, if you see a gold junior out there, and it's like let's say it's down 10% today. Okay, why is it down 10%? Did they come out with news? Probably not, right? So nothing really changed. Are they in production yet? Probably not. But silver's down 10% and the price is down 10%. So you're buying every single asset, every ounce they have, any ounce they could find, yada yada yada, for 10% less, which is, can be crazy. Just this decline in some miners, I think from here to here is probably like 30-35%. Like that drop might give an extra 100% return in the future. Maybe more than that. I bet some actually will give more than 100%. My point is, this is the market. Everything is bullshit. You can't take it seriously. You think this is rational pricing? It's not. It's basically people voting with their feet and add algos and add sentiment, add feelings. This is absolutely bullshit, in my opinion. Anybody thinking that a gold junior, for example, is 10% less valuable today is a retard. That's great. We're either we're getting taken advantage of by Mr. Market, or we take advantage of Mr. Market. So I don't give a shit. Yes, we look stupid, but it's like during the entire let's see, it's a GXJ. It's like, okay, every single buy below the blue line is in green right now. I don't know how many hundreds of millions of shares were sold by people and institutions along around these levels, and they will prove to be, looking wrong, not in the too distant future. So it's like, what is it exactly that the market knows all the time? What is it so efficiently priced? What is it pricing so efficiently? Did it price here that it was going to be down 45% within a few months? That's a world-class bear market right there. If this would be the stock market, 45% is like, that's like the apocalypse almost. In the mining sector it's different, but still, this is a apocalypse. But what was the market pricing in here? That the price was going to be down here? Obviously not. What was the price in down here that it's going to be up 230% within 8 months? Absolutely not. Those are absolutely ridiculous declines and rallies. My point is, in my opinion, don't take the market seriously at any point in time. You're probably, if you just have a long-term investing horizon and some common sense, and can just make cases that you could summarize in 2 sentences, you probably you're probably gonna make much more than most people. So again, what actually changed today? Did the geology change for any junior? Did the gold price go down 10%? Did their produce disappear? Whatever it might be. Absolutely not. Of course not. Of course not. We can see that. If there's no news release, there's no material change to the company. But the price is a totally different thing. So this is of course one of the biggest examples of things too. Why volatility is like the poor man's dry powder. Because you have days like this and nothing as typical makes change. But today everybody feels like everything is risky. So they're okay they're okay selling. And of course they're not selling because whatever gold is down 1% and silver is down 10%. They're selling at minus whatever it might be because they think it could go down more. That's what they're trying to do. That's what they're voting with their feet. They're not selling because they're down today. They're selling because they're afraid they can go down more. So that's AKA same reason why everybody sells the bottom, or most people sells low. They don't sell because it is down. They sell because they think it could go down even more. So it's never cheap enough. Yeah, okay, this is Bitcoin. I mean, obviously, it's pretty easy to. I think I posted that on Twitter. I mean, anybody can see that. You can see that from the moon. Basically, that looks like another head and shoulders, of course. Yeah, not pretty. Let's see here. I think there was some news that I didn't go through. I mean, Tectonic is finally actually starting to hit what we kind of hoped they would be starting to hit. So it's like this was a pretty absurd real result, of course. At Chicken Mountain, we know there's a big gold system or like a very large footprint. And here at the new target, they drilled 44.5 over 48, and then they drilled 272 meters. I actually missed this one. That came today. Yeah, I mean, the thing is, if the metallurgy, and here you have unconstrained growth potential, 3.3 kilometers drilled, mineralized strikes by 700 meters with 300 meters vertical depth, yada yada. So that's I mean, if you do the math on that, that's a huge footprint. And this, of course, doesn't maybe look like much, but that's the beauty of these types of deposit that potential heap leachable. I mean, if this wasn't simple metallurgy, then it would be a completely different thing. But think of think Nevada, where it's like you're heap leaching 0.3, 0.4, for example, and of course the best analog might be Kinross Gold's Fort Knox deposit, which is a reduced intrusion related system. I think they're mining like 0.4 now. Started off at I think 1 gram per ton. My point is that this might not look as much, but this, if you mine this stuff and the metallurgy was good, you would probably be making a shit ton of money today. And of course, as what is typical is that you want a high grade starter pit, because like Kinross, for example, the Fort Knox deposit, if that deposit would be 0.5 grams per ton, no higher starting pit or anything, would they have started that mine when they did? I don't think so. Probably not. But now, years later, gold prices, as they tend to do, go up, and they're making money, and at today's prices, a lot of money at 0.5 grams per ton. And the same goes for their Paracatu asset in Brazil, which has been seen as, it's a huge system, a huge deposit, huge mine. Economies of scale, of course, but not that high grade. I think it's around 0.4 grams per ton, and that might be actually their biggest earner today. I think they produce like 400,000 ounces a year. Not 100% sure, but it's a big operation. Point is, what miners tend to want to see is, high grade starter pits, and we look at some of the hits here. Those are obviously, I mean, incredibly incredibly impressive. So I mean, what would, if this case plays it out, what would it look like? I'm thinking, multi to multi million ounce gold system, where you have uh, some, several million tons or maybe more than that of pretty high grade material, like more than 1 gram per ton. And then you could pay back your capex. I mean, at today's gold price, you can look at any economic study. I mean, most of them have like sub 1 year paybacks. But even if you don't have these gold prices, that you could pay back the capex quickly, and then let's say you have a 20-year free roll on a deposit. That's a good business right there, right? I mean, Kinross, or as a Fort Knox, for example, must have, I don't know how many times over that has paid over, paid off its capex. That's a good business. That's why I love gold developers. Or I mean, this is not a gold developer, but like second part of Lassonde curve, for example, now where some of these projects are, getting towards production, and at these gold prices, they would pay back the initial capex in like 1 year, and then you're free rolling. So let's say the market cap is whatever, 500 million. You pay 500 million to get a mine up and running. You make 500 million every year for the next 15 years or something. I mean, that's imagine if you had that as a bank account. That would be crazy. So glad to see. I still have this is one of the, kind of fire and forget. I mean, I like to spread my bets, and I have warrants in Tectonic. I've been part of, I think, 4 placements. I don't have all the shares. I don't have all the shares that I, from every placement or something. But I mean, I think yes, price is obviously up. But it's like, yes, it's a good reason. Are the risks lower today than before they actually, got hits like this? Of course. So the price should be higher. And who knows, maybe it is even a better buy here than it was at 55 cents, simply because of the de-risking. In terms of absolute potential, it's less, of course. But back here, before these hits were out, I mean, there could have been X amount of news releases where they hit almost nothing. And then it's like, oh shit, yeah, the upside was theoretically large, but it turns out that, so far at least, they haven't hit any sweet spot whatsoever. And then, can you keep the market's attention? Can they get access to capital? Do they get more attempts at trying to find a deposit? This is hard to miss, of course. So this, I think, means that, okay, this suggests there's legs to this very large system, and they have many other targets, and it also suggests that they will probably be able to get money and prove it up. So I mean, if we fast forward 2 years, or 3 years, whatever, hopefully this will be known as this is, pretty obviously a multi-million ounce gold system. I'm not saying that will happen. I'm saying that for sure could happen. And in that case, yeah, these gold prices, they could be worth a few billions. So obviously there's upside left, and I have I'm happy that I have, for example, warrants, quite a few. It's actually not that big of a position, because the rest of the portfolio has grown quite a bit. But yeah, I mean, I think this is one to have on the watch list. At least, and not one to, as always, I'm not betting the farm on Tectonic Metals when I can buy proven ounces in the ground with maybe economic studies, great people, where you're pretty much getting 3x the value that you paid for, meaning that you're buying it 30% net asset value or lower. That's just that's a bargain. That's a factual bargain in a sense. This could turn out to be a factual bargain if they prove up something that's, tier 2, tier 1. Then this could obviously be a 10-20 bagger even from here. But that's not a guarantee, and nobody's going to go broke by betting on probable doublers or triplers. But one could go broke by being all in the potential 10 to 20 baggers, if you know what I mean. So I like to sprinkle some of these around, and as I've shown before, you know, just the math. If you're taking high risk bets, I mean, it was much riskier before, so then you need, you know, the returns need to be better. Speaking of a high risk, high reward bet, I don't know how many, or let's do like this. BCM Resources, I might have talked about this already, but I'm not sure. So BCM Resources, headed by Sergey, a very, very famous geologist, assembled and led the BHP exploration team to discover the Oyu Tolgoi. I mean, that's a monster, that's a super giant deposit. This one I don't know that much about, but I mean, exploration manager for BHP, Anglo American, Anglo Gold Ashanti in discovery of porphyry EU systems. So obviously one of the absolute most experienced veterans, most competent explorers in the entire world. So he for porphyries, and BCM Resources has their TK Thomson Knolls target, which they've already hit. The best hit was, and here you have a mag picture. We're gonna get back to that. Here you have area 2, which is now the focus. Here's where they previously drilled the most. So in phase 3, this was TK8. I think it's the one that went like that, is it? Either that way or that way. I think it's the one here. So TK8, and you can see it's like this is where they drilled, but you have this magnetic feature which you can see here that goes down like that. So this is where they drilled TK8, best result, 155.4 meters, 0.66% copper, 0.12 grams per ton gold, 7.4 grams per ton Ag, included 21.3 meter of 1.25% copper, higher gold, higher silver. And their next plan, where's their next plan? Well, we can look at this first. So this is what they believe they've hit. They believe that this TK8 hole is still in, or is not in the porphyry yet, but hit a skarn zone of a porphyry. I mean, 100 and what was it, 23 meters, 1.25% copper. I mean, there are skarn deposits out there. I mean, skarn are kind of hard, as I understand it. Because they're, you know, as it says, you know, I think it's discontinuous fingers of distal skarn. So they're a bit tricky, but there are skarn deposits. I mean, if you find big skarn bodies of like 100 meters thick of over 1% copper, that might be a mine right there, but that's not what they're after. They're after the big one, because this is kind of the land of the elephants. And here you have their interpretation, and they've done a lot of work with Colorado School of Mines trying to triangulate, so like with all the data in all the holes, which way did the fluids come from? Because skarn obviously travel out from the source intrusion and the metals that brings with it, and then goes outwards, right? So I mean, as a lot of people I guess call it, fingers coming from a hand. And then it's like they can measure, you know, what the temperature would have been, what the geochemistry is, what the metal content is, and then it's like, okay, is TK6 closer to a source than TK4? I mean, did the metals fluids travel farther, for example? Well, in this case, they have, as you can see, they have almost confidence intervals, I guess, where now, based on all their drilling, that it's getting colder out here, it's getting warmer in here. So now they have a vector, and that based on geochemistry and all that, and that vector basically, okay, which direction is the hand? And they believe now that the hand is, where is that? Okay, let's go up to, so they believe this might be the hand. They thought this might be the hand. Doesn't look like it. It's suggesting that it's actually coming from the southwest, and then they obviously have a big magnetic feature there as well. So the phase 2, which they're raising money for, is to drill 8 holes in area 2, and this is the best hit they've had. So it's like, they're stepping into it, etc. I mean, that makes sense. You don't at the same time want to overshoot it. Let's say even if the best magnetic reading would be here, it's the finger is there. I mean, the hand might be here, so you might overshoot it. I mean, this is more like, I was gonna say how they, I guess, drill high-grade epizonal gold systems like Fosterville and Newfound Gold, where it's like where you hit a very high-grade pocket, you grow from there. You don't do 2 big step outs, let's say. So it makes sense. So they're gonna, if the thesis is correct, the source porphyry should be somewhere here. That's what they're getting money together for, and it was announced and basically closed, or announced that it already full immediately. This has been a sleeper since TK8, that hole. When was that drilled? I think it was in 2023. I'm not 100% sure, but I don't think any drilling has happened after they hit the best hole, TK8. This one here. Okay, no drilling since. And then it's like, okay, oh, sleepy story, why haven't they drilled, etc. Yeah, that's true. But what has happened since that discovery hole and before any additional drilling has happened? Well, Kennecott Exploration Company stakes claims adjoining Thomson Knolls porphyry CUAUAGMO system. Kennecott, labeled Kex, claims that's Rio Tinto. This, I think, now it might be the 3rd largest miner on the planet, but historically, typically, it's been just after BHP. This is $50 billion company or something. This is BCM Resources land position. These are Rio Tinto claims. And he did a video with Quinton where they discussed, what the reason for this being. That, I mean, this makes total sense. Of course, as we just discussed, the idea is that they think it's trending southwest. So, I mean, Rio Tinto's basically staked a long strike from where they would be drilling. That says something, obviously. And because they haven't staked up here, they haven't staked there, they haven't staked there. Okay, there's a case where they might not be able to, but you get my point. I mean, the whole idea is that it's trending, yeah, like that. And that's the literal corner they staked. And when asked about these claims, Sergey says something like they might be picking that ground up for just front running the potential of needing infrastructure, for example, and or water rights, I think. So what does that say? Does that mean BCM has a Rio Tinto sized porphyry in Utah of the US? Copper, moly, gold, silver porphyry, like a, who knows, most famous one would be Bingham Canyon, of course. Now that's obviously not a guarantee, but what can we tell? I mean, this is what I like about third-party validation. Would you be a pumper if you said, I think there's multi-billion-dollar potential here? Would you be a pumper? It's like if you just came out and said that. It's like, hey, I own BCM. I think there's multi-billion-dollar potential. They have a market cap of 50 million CAD or 55, so I think there's a potential for a multi-10 plus bagger. Obviously not, since that's what Rio Tinto is basically saying. Rio Tinto knows a lot more than me about porphyries. Knows a lot more about me than me about geology and what a good discovery looks like. I mean, technically, I guess it is a discovery hole because, I mean, that's over 100 gram meter AU equivalent hole they've already hit, even though it's not in the porphyry yet. But I mean, it's a pretty obvious case. That's my point. Rio Tinto is very interested, but does that mean it's a 100% guarantee? Absolutely not. But it's like, okay, what is the least percentage in their minds of chance of success they need to see to do this. I don't know. Maybe it's 2025. In that case, I would say it's pretty cheap. But even if that was the case, it would still be 75 to 80% chance of failure. And that could be true. And then it's like you do a risk reward calculation, and to meaning like, okay, what's 25% of a Rio Tinto size price? How much is that? Is that more than 50 million CAD? Yes, it is. So you could do it just quick and dirty, and obviously it means that yes, this is probably cheap. But also note, because again, I'm gonna participate in the placement. I have skin in the game. I have incentive for sorry, I got a message. I have incentive to see the share price up on paper, even though there's going to be a holding period, or is a holding period, all that. But that's not how I want to make my money, by again pumping and selling into something, even though it's true. So that's why I would like to point out that there's depending on what risk you are okay with. So meaning that, okay, given that this should still be considered a high risk, high reward play. We know it's high reward potential because this 55 million market cap or whatever it is not a Rio Tinto size priced at all. That's not pricing in a Rio Tinto price. Something Rio Tinto would be bothering with, right? So we know the reward, the high reward is true. That's not some junior speculator pumping. That's not some junior promoter pumping. That's not some CEO pumping. That this is Rio Tinto confirming that they think there is potential for a multi-billion-dollar price, and compare that to the market cap. Then we know, yes, this is a high reward case, potential high reward case, but also a high risk case because they could also obviously miss. Or even if it's there, it takes some time to find. So maybe they find it next year or in 3 years, or maybe they find it immediately. We do not know that. But my point is, it's still considered a high risk case. Even as long as it's above 50% chance of failure, which I absolutely assume it is, just for conservative purposes, if nothing else. That also means, okay, if I play high risk, high reward cases, that means I need to see the reward side play out. Because if there was a case where it's like there's a 90% chance you're gonna make 100% of the, or 90% chance you're gonna make money, then you can take, profits easy or quickly in chance of success. Whereas here, if we assume there's 20% chance of success here, you would need 5 of them to have on average 1 success, and that 1 in 5 that is a success has to pay for the other 4. So then obviously you can't sell everything after it's up 50%. So my point is, if you want to be in like the actual porphyry discovery, let's say, I think you need to be prepared to also hold on. And that's why, coming back to reverse engineering, if this is a high risk, high reward play, I'm in it before it gets more de-risk. That means I need to capture more reward, because the more stories like this I'm playing from these risk levels, or these low market cap, high risk levels, I need to get more out of my winners. So you need to ride it longer the higher risk you take, which might sound weird, but that's one big mistake I think a lot of people do. They go into a high risk play and they're up 100% and they're like, sell it all, it worked out. No, it actually did not work, because you just made sure that you're not gonna make any money, because you can't survive if you take 100% profits on high risk cases where at least 4 out of 5 actually go down and you only get a double on the winner. That's a money losing portfolio. The more times you play it like that, the more money you're gonna lose. But then, getting to my next point, the next option is obviously to wait for de-risking, even more de-risking. Let's say they have that, 500 meters of 0.8% copper or something. I'm just making a number up. I don't actually know exactly what you would need to see here, or you know, what would the market see as a legitimate like discovery hole, even very long intervals, but you know, somewhat low grade, but it makes it obvious that okay, there should be something big here. I don't know exactly, but obviously, if they do end up hitting a whatever, or a 500 meters of 1% copper or something bonkers, share price is probably going to be up from these levels by that open, maybe 100%, 200%, or let's say 100%. I mean, that's also pretty good risk reward. I mean, if let's say they come out with a monster hole and you only paid 100% more than now, and then it's of course a bigger chance once they have a hole like that that this is actually as good as it, you know, Rio Tinto hopes it is. So my point is that's up to any one of you, and again, that's why I also want to point out, so I don't feel like a pump and dumper, that a lot of the time waiting for the even, you know, more information is better from a risk reward perspective. Yes, sure, you don't get the absolute upside where it's like if you were in before, you might get a 20 bagger if you held it long enough. If you get in after the more confirmed discovery, you might get an 8 or a 10 bagger. That's still an 8 and a 10 bagger, and probably at higher probabilities. I mean, or think about it like, you know, pre-porphyry bullseye hit, it's 10% of getting a 20 bagger, whereas like post bullseye hit is like 25 or 30% of getting even a 5 bag or 8 bag. I mean, the risk reward is actually better in the post discovery bet probably. So that's what I'm gonna say. So and don't go get all greedy and like, oh, I'm gonna go all in, and if they hit, if what Rio Tinto hopes is there, if I'm all in, I can have my portfolio go up 10 times over the next 2 years. That's in my opinion very stupid and greedy. And again, what's the opportunity cost? The opportunity cost is all the proven stuff out there that's selling for 30% of what it's worth. So yes, I can understand one getting like even this is in my opinion a no-brainer high risk high reward play, simply because of the context here and the market cap. But at this point in time, where a lot of high probability good returners are out there, it's not like I'm in a desperation mode where it's like, okay, there's only the high risk high reward plays, there are no brains anymore. No. So don't go blowing up your, or potentially blowing up your portfolio. Because there's a chance this might go. I mean, we've seen there's been a lot. I mean, I got hit by. I mean, I had high hopes of FINX. I had high hopes of Condor, Rattler. And those ones didn't pan out. But that also confirms then that's like, yes, since they are high risk high reward, where it's like, if they hit, you're looking at 5 to 10 plus baggers. So you don't need many to pay, you know, or you don't need many to pay for the losers. But you need to hold them, the other one. So who knows, maybe BCM is like, okay, this one in particular, maybe they hit something, and maybe that pays off for every single other one I've been in, you know? Okay, cool. But the idea that, oh, I'm into 10, you know, potential 10 bagger plays, that means my portfolio is gonna 10 bag, is like, that's how you really get into trouble. Because the chances of success of making a 10 bagger, you know, quick ones like exploration 10 baggers, they are not at all as high as people think. So just because you're in potential 10 bag plays, that's not the same as, well, you would be very wrong if you think that's the same as, oh, I think that means my portfolio might 10 bag. No, because that's assuming that all the higher sky reward plays are gonna pan out. Anyway, a very interesting case. I think I wouldn't be surprised that once the drilling gets going, that there's some kind of ramp up period as well, where, because this is, I mean, again, high risk, high reward. They're planning to drill 8 holes. If it's there and they hit it, it could go bonkers. So at face value, obviously it's theoretically a quote get rich quick play, and I think a lot of people can't really. It's what do you call it, appetizing. These type of plays draws people in, and especially when there's Rio Tinto that's staked around it. So you already have third party validation that the price could be an elephant, and they might find out in the very next 8 holes. I mean that this is as clear cut, simple, high risk, high reward case there is, and it's not like again, what I like about stories like this, the same goes for whatever Snowline, Rackla, even FINX, because it looked like they had a bullet target, and Condor with their high sulfidation. What I loved about those places that compared to an orogenic gold system or low sulfidation, if they hit something, they're not going to prove up anything of scale typically in 8 holes. Whereas porphyry exploration, and as we saw with Snowline for example, and what was the idea behind Rackla is that in 8 holes you might already know if you hit, blue sky might be there almost. 50% of blue sky might be proven with 9 holes, 8 holes. That you can't do in orogenic gold system. You can't do that in low sulfidation system. I mean, even Great Bear took, what was it, 350,000 meters of drilling to prove up they had 5-6 million ounces. And there's poor examples of porphyries that didn't really grow beyond the first 9 holes. It's like 9 holes was enough to basically outline almost the limit of world-class porphyry. That's what I like about these stories. The payoff curve is sometimes, or theoretically insane compared to a lot of other systems. Blackrock Silver, I mean, they did very well. They're down a bit today though. But what I like about Blackrock Silver, for example, is the fact that it's so goddamn high grade in Nevada, PA, $12 ASIC, after tax $326 million, $23 silver, $1,900 gold. I mean, gold is what, 150% higher, silver is still 200% higher, etc. So it's like at face value, and this is a PA, so it's probably optimistic, but let's say $18 ASIC, whatever. Metals has a shit ton of room to fall before this should be starting to actually not make money. And here upside at $27 silver, $2,280 gold, after tax almost 500 million, after tax IRR of 54, and this is still not even close because these metals are double that. So you can imagine what the IRR is and all that. In Nevada, kind of a brownfield site actually, because it's past producer. Very very high grades. This is the stuff I like. Again, going back to I mean the best mines and deposits, etc. They're gonna be the best. It's like tier 1, tier 2, tier 3 doesn't change depending on what the metal price is. Now when the metal prices are high, tier 3 looks like tier 1 mines. But they're not tier 1s. It's because metal prices are so high. I prefer these types where it's like, okay, let's say Blackrock is fairly valued with silver at $27.6, gold at $2,280. And they're going to be coming out with a new PA because they've drilled more. So maybe those metrics are going to be even better. So in my mind, in a sense, I'm paying fair value for this, and everything above that is free, free rolling. So I'll lose, quote lose, the day silver drops below 27.6 and gold goes below 2,280. which I'm not sure is even gonna happen. And that's assuming, of course, this is anything can happen in mining and all that. This is still a PA. On paper, this is how good it looks. But how often, or this is not the only one. It's like these are the types of cases I really like. That's why I call it kind of the all-weather approach, where you have a huge margin of safety built in. And to be honest, talking about the full cycle of like sentiment and all that, if metal prices were to go to these levels again, Blackrock Silver would be probably cut more than half, and it would be a buy again, because it doesn't change the fact that these grades are very high. So if the sector starts trading like we're not going to have a mining sector again, like it did in 2024, and yeah, everything is selling like they're never going to be a mine. It's like this is probably one of those few projects where it's like this more than most is going to be a mine. So I mean that's why, yeah, I love this sector in that sense, because you can front run scenarios in a sense where the decision makes it easy, where you come to a point where it's like, okay, we're at the point of it's so some stuff out there, high quality stuff, is so cheap that we passed the point of selling, and if it goes down, it just means that it's going to be a bigger buy with more upside. So I'm going to make money later. So it's you don't really come to a conclusion where this is going to necessarily turn into a sell on paper. Yeah, kind of. I was going to say simple as that. But that's also why my portfolio, for example, tends to lag during the beta bull runs, because obviously Blackrock Silver's deposit doesn't look to be very susceptible to, it doesn't need higher metal prices, etc. So what should the leverage be to the upside? It's not that it's going from uneconomic at whatever $50 silver to becoming very economic at $75 silver. No, it was probably very economic at $20-25 per silver, or decently so, at least. I mean, on paper it was already very economic, but even if we include some, yeah, so meaning that it shouldn't go up as much when metals run as the shit projects or the marginal miners, etc. But it shouldn't also go down as much. So, and if I think, hey, this is at least let's say 100-200% undervalued over whatever two-year time frame, yeah, there will be ups and downs along the way. But at the end of the day, I think I'm gonna get, let's say, 100-200%, and with, let's say, pretty high probability. That's an absolute. If I can get my portfolio to just do that, I'm happy. Yeah, and what is the? Yeah, 514. So yeah, again, just going back. So at face value, it's. I mean, I don't know if this is USD or CAD, but yeah, so around these prices. I mean, that's a simple way of looking at it, and PAs are a bit optimistic, but you get my point. It's like, at face value, I'm buying this project as if silver is 27.6 and gold is 2,280, which it is not. So then I guess it's cheap. AMX also one of those where bonanza grades, at least part of the resources, absolute bonanza grades. This gold price is beyond overkill. And all that, and they're in the second part of the Lausanne curve. They're trying to get into production. That would be great, because if they did that, and the economic studies are somewhat in line, they would be making a. Let's see here. Okay, that's the long one. Yeah, and they've also added a shit ton of ground, so now they're kind of getting they're getting ready to be acquired by the looks of it, because that's how you get anyone to pay a premium, right? Let them pay for stuff that you haven't even proven up yet, but that makes it easier for a potential acquirer, which is obviously it looks like Eldorado would be first in line to get that, because they get a district scale land position with a very high grade resource. Yeah, post-tax, base case, spot. Again, this is how quickly the gold prices have gone up. So this is spot $3,400. Then the post-tax NPV is $1.8 billion. Post-tax IRR 107%. Post-payback period, sub 6 months. Imagine you own this. Imagine this is correct. Imagine this is, this is a PA. But imagine that this was exactly on the point. How nice of an investment is it that if I fork out, what's the initial capital? Doesn't it say here? Well, yeah, okay, 146.1 million. Imagine you went to a bank and put in $146.1, or made an investment. That's easier. It's like, here, take my $146. Then that's what it costs to build this project. I'm investing in that. I make that back in, let's say, 0.4 years, or much higher actually, if given that gold price is much higher now. And then you're free rolling from within, let's say, a quarter, which is crazy, but yeah. So imagine you get a payback, you pay your investment back in 3 months. And then anything beyond that is just return on your investment. And then you have, an entire district to play with. And at face value, NPV is 1.8 billion, and market cap is 590. I keep going back to, I put that in my piece I did on AMX, where I covered the story of Integra Gold, which had a similar type of project in Canada, got acquired by Eldorado Gold. Eldorado bought that when gold was, I think, $1,250. $1,250. The NPV of that project at that time was like around 320 million, somewhere along those lines. PA, I'm pretty sure as well. They paid a premium to the spot NPV. Like, what that project on paper, according to a PA, was worth at that gold price, Eldorado paid a premium to it. So I don't think I think that goes to show how weird this sector has become, because if we look at this PA, and this is using spot gold 3,400, assume spot gold is 4,900. What would the spot gold NPV be for Peron? Let's say 2.5 billion. And then add a premium to that. All of a sudden, on paper, this is still very much a multi-bagger, just based on the PA, not including, that they found a lot more stuff that increases the NPV and all that. Do I think that's going to happen? Is AMX going to be acquired for 2.5 billion? No, I don't think so. I don't think buyers are ready for that, and the market is... the junior sector is lagging so much that there's no way... you're not going to see a 200% premium on a gold developer, even if that doesn't even match the purchase price when for the juniors when gold was 2,500. But that's why, again, am I in a rush to sell these juniors? No, on paper, AMX is probably worth 2.5 billion today. It's trading at 588. And again, going back to margin of safety with Blackrock Silver. So on paper, even at $2,500 gold, NPV is 1,085 or 1,085 million. So at face value, and yes, this is a 5% discount rate, you could use it higher and then it would go down. But let's say you used an 8 or whatever. I don't know how exactly it would change it, but let's say it's down to 800 million or something. 800 million is still higher than the current market cap. So at this PA face level, I'm free rolling AMX at any gold price above $2,500 in a sense. And at today's spot, I have a built-in, multi-bagger potential. And that's going also back then to, BCM, where if this wasn't the case, if gold was like $2,000 and AMX was trading at same market cap as it does now, where it's like, it's pretty much fairly valued, there's no margin of safety, yeah, I would be more inclined to take some, high risk, high reward bets that are still no-brainers. But this is the opportunity cost. Stuff like this, that includes Gold Sky, of course, where it's like, I think that's going to be a 5+ million ounce gold system and worth billions of dollars, and I'm paying one. And even given the, I assumed, low cost of Gold Sky, that's going to look cheap even if gold goes down to $3,000. So and I think they can grow a lot, So that's in my opinion how you get just absurd risk reward, and this sector's never even seen that really before. I've never seen this before, where the margin of safety is this high to spot gold, etc. And that's why I think this market is kind of inefficient, because nobody's accustomed to this. Nobody has seen this environment before. Irving Resources, they're doing a placement, upsizing a placement a bit as well. I'm putting some money in here. I mean, mostly because it's 22 million market cap. Who knows? Maybe just the Silica project alone actually is going to be worth more than that. I like the people. I like Japan. I think it's very cool. I honestly would want to go to a site visit there again. If you haven't been to Japan, that's probably my top destination actually. Nobody can really prepare you for Japan. I just assumed it's gonna be like any other modern Western country with just Japanese people, but the culture and everything it's weird. It's like, in a good way, it's like you're on set on some movie or something. Everything is insanely clean. Everyone is super polite, and yeah, it's like a totally different world. It's almost like traveling back in time 100 years or something. With those black and white videos where you have everybody walking around with. I mean, even the shoe shine boy had a hat and a suit on, basically. Not that everybody has a suit on, but it's like it was hard to find somebody in the subway that didn't have their had dirty shoes, for example. So it's very special. So that's kind of the way I see Irving, where it's like they've been at a slow pace. They have Sumitomo, they have Newmont in, they have an exploration alliance with Newmont, and again you can just go back to the fact, okay, because a lot of people will judge obviously Irving because it's down a lot. I mean, you can see this. I've been in this for I don't know how long. And then it's like, whatever, you throw stones at them. It's like, hey, Sumitomo and Newmont got in, and now they have that was actually not me farting, just so you know. That was the share. Now you have, the amount of third-party validation in a sense. So it's like, I think they've gotten a lot of shit, which is typical. This didn't turn out whatever. But it's like, hey, you had Newmont liking this, you had Sumitomo liking this, and now you have JX Metals in it, which is also a very large company. But have we had the success we all hoped for? No. I had very high hopes for, especially Omwi. I wrote a piece of it with the buried system. I mean, there's high-grade bonanza stuff, high-grade 2 bonanza stuff all over the place, and at surface. So it's like, this is a weird case in a sense, where everybody thought it looked really good, and there's high grade vein material all over the place. And I mean, it's not like they haven't hit anything. They hit bonanza grade stuff. It's just that they haven't had the type of success where it's like you could, whatever, a Hishikari type, like $1 billion success, or a real blowout zone, or a Fruta del Norte kind of deal, where it's like, oh, the metals got pooled at depth, and yeah, you have a world-class deposit. But it's like, there's gold there, there's high-grade gold there, but it hasn't been this success yet, at least, that of course Sumitomo and Newmont was hoping for. Does that mean that it was a bad bet? Of course not. I would make that bet any day if I saw these players get in. And now it's on to 22.5 million, and then add some after placement. And Newmont is still in there, and they still have what's it called? The smelter, of course, Yamagano. They have the Noto projects, etc. So basically, how I see this is that, and this is the alliance with Newmont, how I see this is just the silica material that's supposed to be shipped to a smelter, and they get paid for silica, very high purity silica, which is used in the smelters, so they get paid for that. And I'm pretty sure they get paid on the metals as well. So you can see this is like 1 gram per ton material, really, really close to surface. Is it a huge amount? No, but look at the metal prices. So how much is this worth? Is this a multi-bagger in itself? No, I don't really think so. But if you think, well, that's probably, at least worth the current market cap, then you actually are getting free optionality on Yamagano, which is Newmont operated, or maybe Irving operates it, but that's the Yamagano project with Newmont. So free. I mean, they haven't made a barn burner discovery, but they're gonna drill more. So I have a free option in that case on a Newmont JV project, and then Noto projects, and anything more they have at Omui and Omu Sinter, because like there's a lot of gold, and Hukuri as well. And it's Japan, it's been very slow and all that, so they have had a bunch of problems that, or challenges I should say, that have made the pace very slow. But hey, again, going back to it, it's hard to go broke from optionality. There was one case when Irving was $2.7, for example, in much better times, of course, but and more, the idea of them making a Hishikari type discovery soon was really on the play, that was the narrative. Now it's like, no, narrative is that there's no hope here, and that's the beauty of, I like sometimes to find these kind of stories. I mean, including like no resources, I keep coming back and looking at, because like that is, I mean, the sentiment went from some of the highest in the sector to some of the lowest, and that of course people lose money, the stock doesn't go anywhere, so of course everybody's going to be turned off by it. But at some point, some of those stories just become so depressed that nothing good is priced in. And sometimes they end up making a discovery, like the Gray. They were left for dead before they made the Hemai discovery. I think that stock was down to 5 cents, left for dead in the wake of the Pilbara conglomerate story. All of a sudden they hit something, and it was so cheap because everybody had given up on it. They hit something that sold for $6 billion. How often does that happen? Not often. But if you can get a bunch of free shots, that's typically not bad risk reward. I guess that's my point. Homerun has been out with a lot of news. Purchase agreement for 582 hectares of land surface rights for Santa Maria Eterna. So they're kind of still consolidating. So that's what I was gonna say. They're kind of building out the vision. That's how I would put it. And I talked about Homerun recently, so I'm not gonna speak too much on it here. But this is again one of those stories I think where kind of like Gold Sky was, where people got really bored with the story. It appeared like nothing was happening, etc. And I mean, now for example, I think Homerun is very much a show me story, because you see all these news and it's like, you know, agreements, MOUs, offtake MOUs, etc., etc., which is like preparation, because that's not revenue, that's like preparation. They're building up, and this is consolidation, so they're, you know, building up. But the narrative is that nobody gives a shit about these. It's like an explorer. Nobody gives a shit about more potential. That's the narrative kind. That's the sentiment. So you're not getting anything for it. Let's say proving up the potential, or proving up, showing the potential or highlighting the potential, etc. So it's like they keep putting out news releases. This is J control, 5-fold increase in solar glass offtake, stability breakthrough in large area perovskite, how do you pronounce, I don't remember. Retaining more than 95, I mean, I this is above my pay grade anyway. And you can see it's like this didn't really have much effect in the market, this didn't really have much effect in the market, this didn't really. So then the question is like, okay, either the market is right, that these are all nothing burgers, or these are telling us something about the potential of the next 10 news releases, for example. So I mean, this is still signal values, like offtake with Sengi Solar, yada yada. It's like, what if these end up mattering and you're not paying for it? So that's what I see Homerun, and that's been going on for a while now though, because I think a lot of people wanted revenue much quicker, etc. So again, now it's a show me story in terms of revenue, because now and people I talk to is like, yeah, there's a lot of announcements, but not like, you know, in a sense material. It's like almost an explorer out there soil sampling, proving up, you know, a bigger footprint, but everybody's waiting for the actual drill discovery. So all of a sudden people start to not care. And of course the thing is with the markets, people get trained in the sense that the more news releases like this where there is no material reaction in the stock price, that teaches people that they're gonna assume that the next one is not gonna move it either. You know what I mean? So it's like it gets more resistant almost to a point where it's more and more news releases requires more and more discounting to not price in any of them in, right? Because if the price didn't move on this, then you could say, well, that's one news release showing potential, and then two, it's like, yeah, that's another news release showing potential in a different area. So it's not even the same, so they're diversified in a sense, which should have more impact, I guess. But then it doesn't really price that up either, meaning that if the company doesn't get priced up more, that means the discount is high, right? Because now you're discounting away not one but two, and now potentially three. So it can, you know, the or analogy or whatever you call it, with the beach ball being kept underwater, where you see some of these cases where like the narrative, the sentiment for some reason gets kind of stuck, and you know, a company shows more and more potential, let's say, but the market gets trained and refuses to price in potential. So basically the potential price to value discount just keeps on increasing, and then hopefully one day, you know, it starts to show where it's like, hey, all this potential is getting unlocked now. So in hindsight, it's like all these actually did end up mattering. It's just that when the proof in the pudding came, it didn't come immediately. Maybe, you know, there's a delay of 5 months or whatever. But if you appreciated that, hey, I think this has value, the market doesn't price that in. I think this has value, the market doesn't price in. but it's going to get forced to priced in once these actually, gets monetized, for example. I mean, that's how you can make a good return. Now, I don't know enough about silicon, solar, and all that to have like a definite whatever. I can't do a you don't have a PA study for a gold project where you can easily see, for example, or Barsele, for example, where it's like, you have analogs, you have Ikari, you have Young Davidson. It's like pretty obvious that it's probably going to be worth a few $billion at least. That luxury I don't have, since I don't have the expertise, and this is a bit more complicated. But I guess that's why. I mean, I still see Homerun as a potential. A sleeper story, maybe a coiled spring, basically. But there's no guarantee. Again, I can't. There's no guarantee. I think there's a chance that I will end up having a multi-bagger from these levels in Homerun. It might take a few years. I don't know, but I just know I look at the market cap and it's like I don't see much being priced in. And actually, when you read how solar is going and all that, and again the semiconductor industry requiring high purity, ultra high purity silica, I think they're kinda have a good tailwind. FINX. Grand Exploration license for Kero project in Finland and Gishuske gold upside near Kittila and Ikra deposits. So that would be, Kero is here, and it might not look like much, but look at the scale bar. I thought actually Tulpio was higher up. Okay. Thought it was above Rupa. Rupa was, as many know, the by far I would say flagship target, especially since they were literally drilling it. Tulpio, I think, is worth a lot. I mean, I was on the bid at like 10 cents 2 days ago or something, because what's the market cap? 6.5 million cat. I believe, even though Rupa disappointed, of course, it's not that there was no gold, but not anywhere close to kind of hits I was hoping for. It's like 9 meters of 1 gram per ton, 1 meter 3. So it's like there's a gold system there. For sure there's a gold system there. But is there a robust enough gold system? Are the best parts of the gold system? Is it worth even trying to find economic gold deposit here, or is it worth to actually look at someplace else? I don't know. Obviously there's gold there, so it's not totally barren, but it's like, is it enough to follow up on? Maybe this suggests that they believe there's better payoff potential in this, for example, Kero project. And if you look at the historic drilling, these are nothing to sneeze at. 9 meters of almost 2 grams per ton, including 12 grams per ton over 1 meter. So obviously there's some high grade gold there, etc. And to be honest, just the land package alone, if somebody said, would a major be prepared to, buy all this for $10 million? Absolutely, I think so. Just Tulpi alone, which is still on the back burner. I think that's worth more than the current, because there's potential there for a big nickel PGM system, and the current market cap is supposed to price in all the projects. So is this a high risk high reward play? Yeah, they do not have discovery or a deposit yet. So at face value, one could look at it like, well, they don't have anything, so it's not worth anything. But the potential, I think Tulpio has significant potential, and of course all the other projects have potential. You like going to Firefox. How much do you need to find even for it to be some value, given the closeness to proximity to Ikari and Kittilä. I mean, the threshold for success here is kind of low, and the same goes for anything up there in the gold line belt of Gold Sky. If that would be anywhere else, it was like remote Canada, if you find 500,000 ounces, like nobody's gonna ever mine that. Probably worthless. Here, even if you find 300,000 ounces, that might be worth, you know, I don't know, 200 million or whatever, in a satellite, you know, shipping scenario, depending on grade and all that. But that's a good thing, obviously. Like the threshold for success, especially here, is very low. This could be potentially really big, and there's, you know, good people and all that, and it's just super cheap. So, yeah, FINX is, I mean, I would say it's really cheap based on the potential. And it's like, just to get their, you know, some of their land packages, I think somebody would be happy to pay, you know, 10 million for Tulpio and the other gold holdings. If nothing else but just, you know, future potential to whatever, you know, one of the Ikari or Kittilä hubs. Oh, and then we have maybe the hottest topic today, District Metals. Down 51%. It's back to okay. That's not, I thought it would be longer ago. Yeah, it's down to 2025 April levels. Okay, so what happened? Well, I think it was yesterday or something, I posted a tweet where you literally see Ebba Busch, a minister, like the, I don't remember exact title, but kind of like, is she the mine minister or, well, some minister that's talks a lot about mine. I mean, she's been to a bunch of mines and all that. She's been posting so much pro mining stuff, and in that picture, I think I posted at, yeah, somewhere here. She's literally holding Alun shale, which is the stuff that hosts the uranium and all the other critical minerals within the Viken deposit of District Metals, which is the second largest uranium deposit in the world, and then you have Aura Energy right next door with like 1 billion tons as well. You know, infinity deposits. They're in a they're in a area with a lot of local opposition, because in well, I don't know if it's just because of that, but I mean, you know, not NIMBY, not in my backyard, people hear uranium, you know, I mean, that's not maybe a big surprise. But so yeah, this is Viken deposit, this is Hegon deposit, belongs to Aura Energy. So here you see, obviously there's a, you know, lake right next door. I mean, there's you know, houses and farms and stuff like that. So it's not the most remote area. It's near a freshwater source. Here you have all the different metals. So it's absolutely not only uranium. It's that without the uranium, this wouldn't be really economic. Today, I think this deposit would be actually quite economic. Anyway, so we got the lifted uranium ban, and I posted, I think yesterday or recently, that there were polls done in Sweden where it's like, Sweden has not been more pro-nuclear since, I don't know, maybe ever, basically. So it's like, okay, that's great, very pro-nuclear in Sweden. You have Ebba Busch, the minister, literally holding in her hands Alun shale and talks about Sweden needing new mines. Then the day after, or maybe the same day, Romina, or whatever her name is, she might be the mine minister or green minister, whatever her position is. She backtracks because everybody was kind of looking forward to the, lifting the municipal veto, because that's the thing. Even if it's legal to mine and process uranium all of a sudden, the municipalities still had the veto right to, it's like, if they pull their veto, it doesn't matter if it's legal, because they stopped it, right? And that's what people were hoping to go away as well. Again, makes total sense. I mean, how many are gonna be enthusiastic? I mean, even of regular mine people. I mean, even there was the toy mine, the Botany Exploration mine, which is like 9,000 ounces underground per year. And there was some guy who's like, oh, there's a creek 200 meters away or something like that. You know, I mean, total lunatics in some sense. But that's for a super small scale. There's always going to be some opposition, of course, anywhere in the world, especially Western countries. There's never going to be 100% on board. But when you take uranium and, you know, close to water, etc., etc., so it's like, yeah, you know, and of course they're going to be typically very misinformed, the locals, and you know the lobbyist movements. They're going to be out there saying that everybody's going to die and all that. I mean, you know the drill. And of course, people, fear mongering is very powerful. That's why newspaper, you know, often have that as headlines. You know, this spot could be a sign of cancer. You can read on some magazine, and that's like, that sells. Now I gotta find out what, you know, because I have a spot, I might die of cancer. So that kind of makes sense. But so that then the thing was like, okay, we need, you know, the municipal veto kind of needs to go away. You kind of have to, you know, force feed people, because nobody, if nobody wants a mine, there's not going to be any mines anywhere, right? So it's like, what's the saying? The needs of the many is more important than the needs of the few. Well, if you live there and you get this fear propaganda, of course you're gonna probably say, I don't want it there. And if they have a veto to stop it, they're probably gonna stop it. So now, because I assume it's an election year and they want to please everyone, if you know what I mean, they backtracked and said that, oh, we're probably gonna have the veto rights still, and we're gonna do a quick whatever investigation, and you know how politicians work. They're gonna assign some group to look into it. So that seems to be what really, like, yeah, triggered everything. And I mean, have a taste of this article. So Affärsvärlden basically translates to the business world. It's a pretty big newspaper in Sweden, like for mostly, I think, retail, you know, business retail stocks and stuff. They've apparently been bearish on it since August of last year. Sell recommendation. I mean, that made them look stupid, of course. So like, that's obviously one reason why they really brought the hammer. So this is Google translated snapshot of it. Yesterday's announcement from the government completely removes the rug. I mean, that's like stock lingo, you know, rug pull, from District Metals, and we do not see there is any significant value left in the company. We maintain, I mean, these are not mining analysts. They are, you know, stock analysts, like a retail stock magazine. So of course, as per usual, they really don't know what the fuck they're saying. They don't even know how to value stuff in the mining business. But regardless, I mean, imagine you're a retail shareholder in Sweden reading this headline: any significant value left in the company. How does that translate in anyone's head? That translates to basically worthless. So when I saw that, it's like, yeah, okay, I get it. I get it. It's like, that must have absolutely scared the shit out of every retail investor in Sweden who saw that headline. And then we have an absolutely monumental dip. But as I've said for some time, I think Viken was always going to be difficult. I mean, if they removed the municipal veto, and given how, you know, the dislocation between Europe and the US, so much like all the geopolitical tailwinds that one could want was kind of has been happening. I mean, they did lift the moratorium on uranium after just 7 years of it being implemented, which is kind of crazy of a U-turn to begin with. Then you have Ebba Busch, as recently as yesterday, holding alun shales. You have Sweden talking about nuclear weapons again, and wouldn't you know it, what was the source of the nuclear program in the 60s? Alun shales. And you have the most pro-nuclear populace in ages. So it's like, talk about a U-turn within a U-turn when this veto stuff, and it's also only, I think, relevant for alun shales. So it was kind of specifically targeted that, there's going to be a veto for alun shales, as far as I understand. And it's like, okay, well, the biggest deposit and the second the biggest deposit district has, and the second biggest uranium deposit in the world is alun shales, and it's in the Viken deposit, which is here. And that's why I already, for months have said that's like, I like the fact that they were just staking more and more ground. I mean, here you, for example, see there might be a shit ton of more alun shales here. I mean, Viken could still just be a, the iceberg in a sense, or any of these other. I mean, you don't need 3 billion tons to have a mine that's worth more than the current market cap. Then I guess now the question is like, A, are they going to put back the veto? B, how's the veto going to look? Is there going to be some wiggle room where it's like, well, if it's for national security, we can actually override it? And then they might do that. So that's the hard part, where it's like, I don't know exactly how serious they are in a sense. Is this to placate some voters? It sounds good with a veto, but there's actually going to be a wiggle room where they can just, hey, I know you don't like it, nobody likes to have a mine, but you have to do this for national security reasons. Then maybe not necessarily only Beacon, but some other could go ahead. But of course, that's also going to probably, if your district's like, you're probably going to pause and think like, okay, how much do we want to do? Do we want more, clarity, etc.? So that I don't know exactly how it's going to turn out. But my point is that I don't think this, even though I think Viken is still going to be relatively hard, but I don't know how, or relatively hard, let's say very hard. I don't know how sensitive, let's say, some of these other areas is. I mean, you don't need much. Look at the scale bar. This is 2.5 kilometers. You need if you have a patch like that with like Viken type stuff, you probably have a mine already. So they have a bunch of other uranium properties as well, and of course that's not something that the Affärsvärlden is gonna bring up, of course. So I don't know, maybe there's gonna be a pivot, and maybe it's like election comes and goes, all of a sudden they go back because they use this as, we call it election blubber in Swedish, where you just promise everything to everyone. So maybe they revise it after the election when they get, if they get 4 new years, for example, or it might be a hard veto and we can forget about at least Viken, or maybe close by, because obviously if you protest this, you're probably not going to okay a mine here, for example, maybe up here, maybe there, maybe wherever. So there's a lot of unknowns, I would say, still. I actually did buy some shares today, not a lot. So it's like, talk about twists and turns. First it was the ramp up to letting go to uranium, then all this, every signal suggesting that's like this is go time, and then they go and do this, and even when they, quote, do this, we don't know how serious it's going to be. And here you obviously, in another place of Sweden, you have even more properties. So this I mean, it is fun to see what happened. I mean, let's say 5 years. This isn't 5 years. I mean, just okay. March, let's say 3 years, from 15 cents to, what was the high? 1.65, say. One of the best performers during this period, kinda. It's gonna be interesting to see where BCM Metals is in 3 years. I'm not saying, bet the farm or anything like that. I'm just saying that what do we know? We know this new turn, which we don't actually know exactly how that's gonna play out. We know obviously they have the base metal assets as well. We know they have a shit ton of additional uranium assets. Some are all in shales assets, some are not. So we know they have multiple uranium assets outside of Beacon. We know they have their base metal projects as well. But we don't know exactly how this municipal veto is gonna affect things. So that's what's gonna be interesting. It's like if we come back in 3 years, I have no idea what's gonna happen, or how this is gonna look. And that's why it's like, to me, I think this has again, in a sense, turned to somewhat of a high risk, high reward play, where we've seen where it can go when people thought that this could get going, because we were up at 1.5 or something dollars, and that's before everything was kinda in the clear, in a sense. So that's what's gonna be interesting. I hope you get my point. I was gonna say where it's kinda, for the time being, it's almost because now you can mine uranium, so that's passed. So like you can I mean there's let's say there's value to actually having a uranium asset in Sweden, but it's the oil and shales where it seems the municipal veto is actually gonna be left in place. But this scrambled obviously stuff a lot. But hey, within 6 months things might look very different. So I'm just gonna, that's what I guess want to point out, that I don't have a crystal ball for this. I think it's back now in it's up to each and every one basically to try to figure out how this might look in a year, or 6 months, a year, 2 years, etc. Again, almost like an exploration stock, where it's like if things go well, if they make the veto a soft one with like wiggle room, or you can work around it, maybe this is gonna look really cheap in the future. Or if it's gonna be a hard veto, where the oil and shales are basically, all the oil and shales properties are like, those are probably total no-goes. Well, then you're back to the hard hard rock uranium projects plus the base metal projects, etc. So that's the thing. It's yeah. I mean, now it's up to each and every own, I was gonna say, to try and figure this out. And of course, one thing I would say is like, now it's gonna be interesting in the sense to follow it and see if how set are they on this, or is there gonna be another twist? I mean, one thing I just started thinking about is that, I mean, it was said that our nuclear program, for example, in the 60s, that was like 2 weeks from actually having a nuclear bomb, and then an agreement was made with like the US where, oh, don't worry, you're gonna be under our nuclear umbrella. Don't produce any nuclear weapons yourselves. I mean, that's obviously for influence and all that. And what have you seen recently? First we saw Greenland and stuff, which heated things up between the EU, and that's when the Nordics started to talk about their own nuclear weapons, which makes this again look very ridiculous. But at the same time, I think it was announced yesterday that EU and US came to some critical minerals agreement. So then the question is like, is there more geopolitics behind this? Where it's like, okay, you see, the US sees, oh shit, everyone is going to get nuclear weapons and whatever. So let's tone it down. Let's backtrack a bit. Let's share our resources. So like, hey, you don't need to mine uranium at home. We can sell it to you, etc., etc. So that's what I don't, because this is such a weird. I mean, yes, it's election year, so that point I get, but it's such a weird turn of events that I don't fully understand what actually happen and what the motive is behind it. I mean, if there's some behind the scenes geopolitical agreement about whatever resources, uranium, and then nuclear weapons, maybe they're gonna sacrifice the oil and shales or something. I don't know. So that's I guess one thing I can yeah say. It's like I sure don't know. Anyway, this has gone long enough. Thanks for listening. Do your own due diligence. Never invest money you cannot afford to lose. Never bet your farm on one single stock. Consider me biased. I'm probably, I don't remember every company I've talked about, or I'm probably invested in all of them. Some are banner sponsors as well. So yeah, twice biased, and yeah, I mean, buy cheap, hodl. Some are gonna work out well, I think, and you're gonna make money. Bye.